Good morning. You're watching The Market right here on ET Now. A show of resilience by our markets yesterday. Just about, beat around in a 1% odd kind of band in the markets yesterday from the highs to the lows of the day. But yeah, this morning you've got another status quo from the Fed, and that is something that the markets are reacting to.
So Aisha, frankly, Fed is a no-show, but you have to just take the clock back and say, okay, as we walked into trade this morning, the news was that there was a retaliation by Indian armed forces. These are typical geopolitical tensions, and historically, when these geopolitical tensions have surfaced off markets, they tend to get nervous. But what we saw yesterday was not only extraordinary resilience by benchmark indices, there was no panic whatsoever by institutional investors, which is that DIs, of course, on expected lines, they were net buyers, but more importantly, foreign institutional investors, that entire buying spree continues. So institutional investors, and especially foreign institutional investors who tend to really run for cover when geopolitical tensions they surface off, because that is the historical pattern, they did not panic. There was no short built up or no large short built up in the F&O market. The market breadth not great, but nothing very alarming. So as we walk into trade this morning, Aisha, I think the talking point still would be that what is next and how things would move on the geopolitical front. But that is the talking point. That may not be the actionable point. And I think the same spirit was there yesterday. That we spoke about it, we analyzed it, we were glued to our television screens, we wanted to update ourselves with what is coming next in terms of information, in terms of communication. But that in a sense did not influence the trade yesterday. So this big hump that geopolitical concerns would derail the market, I think that is out. That's point one. Second point, Aisha, is that we've underperformed the global markets in the last couple of days, largely because of the concerns on the geopolitical front. So are we likely to catch up? Which may happen because institutional investors are there. Short selling is not started. The only caveat here is that you don't want further escalation, which so far looks unlikely. So one more event risk is over, actually. I look at it this way.
It was an utter show of resilience from our markets, you'd have to say. I mean, there was nothing different from what you saw on a Monday to what you saw in trade yesterday. We were largely quiet, like I said. A lot of individual movers, of course, a lot of stock-specific news, a lot of earnings reactions is what actually led the markets. And that's pretty much been the case for all through last week. I mean, that was the case last week too, and that's been the case in the last 7 trading sessions as well. It was really no different. I mean, be it a move on the Tata Power, a Bajaj Finance which held out well, M&M which continues to show leadership, or some of the underperforming names like an Asian Paints, a Sun Pharma, Hudco, etc. They were all very news specific triggers that the stocks reacted to. But let's talk about what's happening globally. And Wall Street, while it managed to close in higher, tracking the FOMC, but it was a status quo from the FOMC for a third consecutive time again. In fact, it's a wait and watch mode that continues to be the mantra for the US Fed as well. And I think he mentioned wait and watch quite many times in his speech yesterday.
Yeah, it has to be wait and watch because the twist and the turns of the impact of tariff will be visible now. It's not that it was expected to be evident in the last US high frequency data points. So Fed on expected lines has not moved. Fed on expected lines has said that near-term inflation is expected to move up, and till the time there is no clarity on the tariff front, they are unlikely to move down. Now, I think this entire concern which market had, are we likely to see the back of the Fed chairman Jay Powell very soon, that also surely has got arrested for the moment. So Fed is thinking independently, which is what is important. They are not getting influenced, and they in a sense are doing what their data seems to be prompting them. I don't think this is something which will help the market or disturb the market, because this in a sense was expected to be a no event where they will talk about no rate cut, concerns about no clarity about trade tariff, and real risk of inflation going up in the short term. Aisha, there used to be a time then whatever Fed would say, the whole world would just act and react to it. Gone are those days now. Fed is crucial, Fed is important, but it is not really having a very meaningful impact. The reading post-COVID has been terrible, and the impact assessment in terms of what they're able to do has not really been great. So whatever Fed says is a good headline to read,
talk about next morning.
But it's not something which is really going to be influencing the trade. Even US markets don't get influenced by that. I mean, they can do binary moves but sabka samay aata hai. This is not the Fed's time to influence the financial market now.
Yeah, they remain on hold as expected. I mean, nothing higher, noting higher risks to both inflation and unemployment. They will remain in wait and watch mode for some more time, and we'll see only 2 cuts this year as per the previous dot plot. In the meantime, there are other data points from the Taiwanese markets, for instance, wherein the inflation has now eased to about 2%, which may partly reflect the currency appreciation as well that country has seen because of the tariff escalations, and rate cuts perhaps are going to be in store from other central banks. So I think one can easily establish that it's only the Fed which has not really moved. Pretty much all the world central bankers have moved on the rate easing cycle. But I think the bigger trigger for the markets is going to be what Trump's comments have been, saying that big news conference tomorrow morning at 10 a.m., which is our time tonight, saying the Oval Office is concerning a major trade deal with representatives of a big and highly respected country, the first of many. That's the word coming in from him. So I think the markets have also digested that it's not going to be as much of a panic, the entire tariff tirade, and eventually negotiations will happen.
So let's try and guess what could happen. We are guessing, trying to put 2 and 2 together. It will not be China.
Because it seems that US and China are also meeting on Saturday in Switzerland to try and sit across the table.
Exactly. So China announcement is not going to come tomorrow morning. They'll be meeting on Saturday.
Yeah.
Then it's rest of the world. Within rest of the world, which is the easy deal to call? It's UK. Why? Because the UK and the US trade balance is actually surplus. So US will not have any large problems in going ahead with the trade deal with UK, because the spirit of the whole trade deal is structured around the fact that we need to cut a fiscal deficit, or we need to cut a deficit. The UK-US deficit is not large. It's not going to hurt the US economy. But the trade tariffs were very universal in nature. It did not differentiate between countries, which they should have. So I think logically speaking, it could be UK. They've been US's long-term ally as well. They've been long-term ally in terms of supporting them on various forums. So if a deal with UK goes through, it clearly means that trade deals are getting stitched up. Now, from an Indian market standpoint, I can only think of few auto stocks, and I can only think of 1 or 2 technology companies which in a sense could see impact of it. JLR is a UK-based company. Tariffs were imposed. Car tariffs were rolled back, but sentimentally, I think there is some more scope for it to go higher. Maybe some IT companies could see some sentimental rub-off effect if the UK trade deal goes through. But more than anything else, I think it's the messaging which is important, that the ball has started rolling in terms of in terms of getting the big deals going. So there could be UK, US and China. It's not going to be a single day negotiation. It will take some time, but hopefully an icebreaker could happen there, and then hopefully some more deals. So before the 90-day window, and China is an exception, that's an outlier, hopefully a lot of deals would be stitched up. And I think the real story, Aisha, frankly, which we did not speak about it because you were so occupied with what was really happening on the border front, was FTA. UK FTA has gone through, and it had a meaning. It did not have a meaningful impact on the market yesterday, but today that could be a talking point. The mind was occupied with something else. So I think that's another talking point which I think markets will talk about today.
Yeah, and I think the big questions are whether